Well, good weekend, all. Ira Epstein, and here we are with your financial market wrap-up. And this is for Thursday evening, July 3rd, 2025, getting on to 6:50 p.m. A limited amount of markets are open in futures tonight. They close early tomorrow. You saw that you had a close that matched the stock market today in the futures markets. And it's hard at the 4th of July because all the times are so confusing. Now, the big event of the day was obviously two parts. The first part was the jobs report in the morning, and it blew the market away. They weren't ready for that strong of a report. Unemployment fell back to 4.1%, and all the other small reports that came out sort of backed this up. From jobless claims on, everything was in pretty darn good shape. So you cannot say that the jobs market is weakened. I saw an argument on CNBC between Steve Leisman and Rick Santelli. And I know Rick. I have known Rick for, 25 years. And to make a long story short, Steve was trying to make the argument, well, maybe the market is weakening because the jobs were primarily from governments, be it the state, the local governments, the Fed, hiring back some people. A job's a job. Doesn't matter. If anything, the government's been cutting. So it's staying strong is the way to look at it. And it was a surprise in the strength. Then, of course, we went in and we saw that the president got his big, beautiful tax bill, what other people are now calling the spending tax bill, but it went through. I thought it would. I didn't know if it could get through by the 4th. I had no doubt in my mind he was going to get the bill passed. It was a question of timing. And at the end of the day, the barbecues won out. And Congress got smart, and they said, if we keep going back, where are we going? Committees and so on, let's get this done. And basically, what the president and Mike Johnson had to do is take people into the back room, make them certain promises, explain things, explain how they'll make it work for certain parts that people had trouble with. And that's how it's done. That's why it's called politics. You may not approve of it. I may not approve of it. It's the way that it's done. So you've got it. Now the onus is on a president that this is his legacy. You think of everything he has done since January 20th. It's amazing. It's beyond amazing, all right? Here we are with the man in his first 6 months, basically, that has resolved at least some things with wars, not much. Ukraine's still going on, Israel is, but he got us into a war with Iran. I mean, when you attack with your plane, you're at war. He got us out of a war. He's gotten his big, beautiful tax bill. He's doing tariffs. He's got NATO to defend themselves. I mean, I can go on and on and on. You're going to tell me all the negatives, and I know that. Okay. And you're going to tell me you hate this bill because it takes certain welfare things away from people and so on. And I get it. I do get it. But a lot of these people can work. A lot of them can give community service. They're not saying you have to get a job. They're saying then give community service, earn your right to it. We'll see where it all goes, all right? But his legacy is being made, and I thought it would. I thought he'd hit the ground running because actually, he's got no more than 2 years to do this all. We don't know what the midterms are going to show. And for the 6 to 8 months leading up to the midterms, a lot of things can change. So it's really a year and a quarter, and that's about what he had. All right. What I have with you is the opportunity for you to take advantage this 4th of 40% off any of my research. All I have to do is give you one good idea that maybe pushes you over, that you were thinking of doing that anyways. Darn it, that got you going. And, it could be in the futures. It could be in the SPDR ETFs. I pride myself on what I do there. And think about this. You get, from the futures alone, 25 videos a month on average. You get 25 on the SPDRs. So that's per month. Each is 15 to 17 minutes long, and they're labeled stocks, SPDRs, ETFs. When you go through them, the metal markets, the oil, the energies, everything that I want in there. So you're able to scroll it and really use it efficiently, see what it is. You get combinations, and it's all based. Everything I do is based on chart action. So that's where this comes from. It is a mixture. Some of the trades will be long-term. They'll be the weekly charts. Others will be shorter term in nature. It's what the market offers. And by doing the combination, what happens is you really get the full feel because so many of the ETF spiders are based on futures. And it's a cool way to go. And then if you want ideas about where the market's headed, that's where my complete futures come in. Why? That's where my ideas come out. I start prepping you. Before this copper squeeze grabbed hold, I was on it 3 weeks ago, and I was telling people this thing's going. I said, they've taken the copper out of the LME where it's down 80% since the beginning of the year, deliverable stocks. Uh-oh, all the long it's got to do is sit there. Where's the short going to be able to deliver from? That started the play. And why did the copper move? Because nobody knows what was going to be and still doesn't know. For countries that send us copper, what is the president's tariffs going to be? And that carries me to the next part that I'll get with you. But take advantage. The charting courses, you see what I do here. Learn about it. Just iraepstein.com, courses or research. So the tariffs are going to be your next big event. July 9th's right around the corner. It's self-imposed, but the president will probably go with it because he's pretty good at doing that. I certainly don't envy what Japan's going to go through because they're now the bad guy on the street. We'll see if Canada can suddenly make nice with the United States and things get done on a positive note so that our northern neighbor they start coming back to America and we start feeling welcome there. I mean, it's all politics. The American people love the Canadians, let me tell you that. And Mexico's been very quiet. The peso's been rising. I think Ms. Sheinbaum, and I've said it since she got in office, I think she gets this game better than most. And I think she understands how to play with the president. And I'm expecting that they're going to come out of that in pretty good shape. Some of the countries, I don't know what Korea's going to end up doing. They could have a problem with the president just the way that Japan does. And the European Union, we're going to find this all out. This is going to be a big week, huge week, so you want to pay attention. All righty. So where we're headed right now, and when we look at all this, take a look. If you were to finish right now, you're at an all-time high in the S&P 500. The chart has run, and from that April 7th bottom, it's just been, it caught me by surprise. Generally, you get a bounce, you'll pull up to a previous spot, you'll dive a little bit, and you see if you can roll over. I didn't see this coming April 7th. I saw a couple of Evercore. I saw them make that call. And I'm going, boy, that's a pretty gutsy call. They're calling the day that the market did it. They were right. Saw it on TV, and I'm going, that they were dead right on that. And then others were joining in, and I realized what was going on. But it took me to about here to get that and understand what was going on there. You've got higher lows, higher highs. The market is running. Everything's bullish. You would say, well, today's jobs report, Ira, the Fed's not going to cut interest rates right away. We don't need them to. The economy's humming. 147,000 jobs, revisions for 2 months, added more jobs to it. Unemployment at 4.1%. The consumer is spending. You saw that from the MasterCard interviews a week ago when they were on with Kramer. If you watch some of these things, you get to feel what the economy's doing, and the economy's in good shape. Summertime, in many years, is very bullish. You're at that point. This market's going. Those that said sell May and go away, well, they're gone. They're blown out of the market. Higher lows, higher highs over all the key moving averages, and it's running the Bollinger Band. This is called the Gorilla Glue trade. And what it forces is the slow stochastic to lock in and become embedded. And what that is when the red and the blue lines, the two numbers that make up the slow stochastic, are going sideways over 80 for several sessions or more. You have to use the word sessions. It could be a 5-minute chart, a 15, a 1 hour. A chart's a chart. So that is just power. So the first break in the market's probably going to get a nice buying amount. People are caught. The hedge funds that were short, they're caught. So we'll see what goes on. Remember, in futures, for every long, there's a short. And when a market's at an all-time high, it means the open interest, which is the amount of longs and shorts, everybody that is short the market, sellers, they have a loss. And that's what you have in this market right now. Same thing going on in the Dow with an embedded reading. There's no reason not to be bullish. Same thing right here in the Russell. Identical. And I've made my statement to you. I said that now the scrap players are going to be buying this market. It's probably going to do well now. And that's because on breaks coming from these big highs, well, it never rallied as much, so it doesn't have to break as much. And that's important. Would I tell you to get in at the first move over a 200-day average? Absolutely not. Would I tell you to chase the market when you're not embedded and you're overbought? Absolutely not. But recognize what is going on and apply it, in my opinion, to your trading strategy. Will the DAX be able to make it back up here? Probably not right now. The only reason, not that there's not good things going on there, everybody's focused on the U.S. with the tariffs, with the jobs report, with what the Fed will do. And mentioning that to you, you know that the president's going to pick on Fed Chair Powell, period, until he either drives him out of office or he's just become so insulting you all get offended. I'm already offended. I don't think he should be calling him a moron. I don't think he should talk about his schooling, that he doesn't think it's right. Who is he to say all that? This is your Fed chair. I don't buy that. I don't want to see it. Look up the name Arthur Burns for many of you that are young. You don't want to get into that where all of a sudden you've got a Fed chair that just listens to the president and got you into big time problems. You want restraint, and that's why the separation between what they do and everybody else has to stay intact. You can see where you're at here, still looking for 45.35. Then we come to the bond market, which got slammed. Okay, you lost the embedded reading. You and I had seen this. This is why you want to take the course. I won't always be here to teach you these things. You're embedded, you lose it. The odds favor that either that's the support or it's going to the next moving average, which is the 100. Kaboom. And you see this over and over on the charts, how they did it. And that happened back and forth. Does it work every time? No. There is no signal on a chart that works every time. When you read that somebody's found something and this thing works all the time, why would he give it to you? What is so special about you that this man that can take $1,000 and he can double it over and over and over to infinity, because it always works on this trade, he's going to suddenly give it to you. And if you buy into that, you deserve to lose your money. There are things that are high probabilities, and you go back and track them. Nothing works all the time but death and tax. Lower highs, now you're trying to come up here in the dollar index. You never did embed on this round. You can get a bounce. I want it to bounce. I want to be a seller of the dollar at a different area. And I'm always going to question, was that it? Now, if you think I'm not doing that, you are foolish, all right? There'll be a point where the dollar's back in vogue. I don't know where it's at. I know right here, this isn't that. When I look at the euro, as long as you keep the bullish embedded reading, fine. Sometimes this breaks ahead of the market. So if you get down on a close under 79, you're probably going to make a run wherever this red line ends up, and that could give the dollar the boost. But if you stay embedded here and the dollar rallies, no. That won't be the trick. This is 57% of the weighting of the dollar index. In the British pound, Starmer came around. And he went out last night and cleaned up his mess, and he made a mess. And he said that Ms. Reeves, she's there, she's going to run on his ticket. She's the sound person. You don't want to get somebody that just goes in for all this welfare spending. You've got to have somebody's got to look at the Treasury. Higher high, lower low, no real trend right now. In Bitcoin, you've heard me say over and over, I think the next move is a large up move. I think this is a base that is forming in the market. When we look at the energies, and what I've said to you is pretty consistent. Why do you want to guess what OPEC's going to do or not do come Sunday? Why don't we see what they're going to do or not do and let it go from there? You've had short covering. This is all the effect of the I don't know, what would you call it, 1 hour war that the United States had with Iran. We didn't go over and over with our planes. We went over, we made our run, and we scooted back to Missouri. And bingo. So that was it. Now the market's adjusting to all that. And I think that's the right way to do it. And if you'll notice, remember I told you the Ayatollah's getting himself and Iran in trouble? Look at now who's talking. It's not the Ayatollah. They've got ministers. And now they're saying it's easily 2 years worth of damage before we could even get our programs back up. Of course, you don't want to believe them, but that's the sound of reason to keep everybody away from them, and that's what they should be doing. Some of this is so easy. I don't understand how you get some nuts out there that don't get it. Natural gas, the market is just still plenty of natural gas, and the weather isn't such that you're not able to put some away. Like I was just looking at what we did. We were expecting 50 billion cubic feet. You got 55. Those aren't the things that'll make the market rally. You want to see the draws are massive because soon you'll go back to putting in all this fuel again, and you've got to watch all this. Very, very important. And what you watch is the sale. The sale's going on for a few days yet. 4th of July, 40% off any of the courses or my courses through there. I will not put out an update in the morning. I, too, will enjoy myself on the 4th. And I will catch up with everybody over the weekend when we do our weekly updates of the futures market and the metals, the financial markets and the metals. I am going to do, though, for the weekend, my SPDR ETF today, Friday. You take care. I'll catch up with you all come Monday morning. Take care.